Before we start, quick reminder for attendees on 29 March, look for your email for the exact address at 50 Stamford Road. If you're looking to join us for our next event, I still have one last one on 12th of April, Saturday, so look for our links below. The S&P 500 has been on a wild swing down of about 10% for the last few weeks. On the other hand, the other parts of the world like Europe and China, while it's up, it's also super volatile. So this period, let me share with you some nuggets of wisdom as well as some thought processes, because I myself, I'm in the markets, correct? So I experienced all these big swings and I want to show you what I'm doing behind the scenes. I prepared 3 stories to share with you, 2 of which are actually companies that I'm taking profits on, and the last one is actually my biggest holding. So if you're curious to find out, continue watching. Hi guys, welcome back. Without further ado, let me share with you what these 3 stories are so that you can zip forward to whichever that relates most to you. In any case, if all relates, then listen throughout. The first story is actually on a toy company that is making heads turn, and this is none other than Mart. The second company I'll be touching on is actually First Resources, an agriculture company I've held for a few years already. I've been previously a big bull on palm oil prices. That in itself has certain lessons for me. And last but not least, the third is actually on Palantir. Just in case you are big on US stocks and you're also a Palantir shareholder, let me share with you what I'm thinking right now. Timestamps are right below in the chapters, so let's get on to it. First story, Mart. Back in November, I've actually completed a full analysis on Mart and actually shared with private clients in this report. I saw long queues in the KL Mart, so I know the fad is real, and it sparked my interest to think whether there's profit to be made. The easy assumption back then was to think that Mart is a one-hit wonder, and after this fad, of course it's going to come crashing down. But when you think deeper about it, there are ingredients of success that can be replicated, and we never know when the fad exactly dies down. Some fads can last for a few years if you look deeper into it. If you don't know, Mart owns the IP for Labubu, and not all toys are the same. That is why if you think of Mattel, for example, who owns Barbie, you would think that maybe there isn't too much growth, and the share price of Mattel has reflected that. Low growth, low PE multiple company. In that case, Barbie has also done some movies, correct? And why has it not driven up more sales for Mattel? I'm not too sure about that myself. But I chose to believe that Mart could be onto something, and therefore I pivoted the comparison closer to the owner of Hello Kitty, which is none other than Sanrio. As you can see, Sanrio has done a 13x over the last 5 years. While Hello Kitty is nothing new, its expansion of the brand has delivered profits that has been growing very quickly in the last few years. Mart is experiencing triple-digit growth right now, simply because of the Labubu hype. But buying Labubu toy or buying Mart, I chose to buy Mart because I believe the company can replicate success. And as we look at some reports, we would realize that previously the craze seemed to be even higher. One toy was ranging $35 to $50, but that price, it may be coming down already. The simple reason is narrated right at the very bottom. Once the market becomes saturated, it will naturally lead to a price drop because there is excess supply. Again, there's a risk phase if you are buying the toy to make profit. But right now, we are owning the company, correct? And thankfully, if the company knows how to replicate success, such as this in Nerja 2, they could have a new wave of growth coming up. And this has led to some analysts to re-rate Mart to $150. I would love that to happen because I'm still holding on to some Mart shares, and let me share with you what I've done so far. I started accumulating Mart about 4 or 5 months ago, and what you can see is that even in downturns, I was buying because it's quite clear to me that the growth trajectory has a lot of legs. But no one can anticipate how fast growth comes in, correct? And at around $115, I've started to sell already. All in all, in Hong Kong dollars, this is about 50,000+. In Sing dollars, this is about 10,000. And I've realized a large portion of it already. Key takeaway, you need to be patient. Don't sell after just like 5% gains. You need to hold on to 20, 50, or even 100%. Then you exit. Changing this very one move could help you improve your investment outcome by a lot. To this point, I'd also like to pivot a bit. Some things I've sold off in the last few months. LHN is something I've mentioned before on the channel. This also is a story of accumulating it and holding it through bearish periods. And when the wind blows with you and Mr. Market is happy to give you a good price, decide if it's time to exit. Hopefully it's also brought you profits, and as always, smash the like button, smash the subscribe join our family to reach 70,000 subscribers. And along the way, you get notified when I have interesting investment ideas or retirement planning solutions to share with you on this very channel. And that leads to my second story. I once held positions in Golden Agri, Bumitama Agri, and First Resources. The one that I've been selling most recently is actually First Resources. Back in 2022, Russia attacked Ukraine, correct? And Ukraine actually exports a lot of sunflower oil. These are vegetable oils that the world needs. And when one source is gone, of course, the world will be looking for alternatives, correct? And that's why palm oil actually benefited massively. All the palm oil stocks started to rally. And as you all know, the war is still ongoing right there, correct? Most of the exporting ports are still not functioning. Most of Ukraine is still not available to do sunflower planting. In theory, all vegetable oil prices should go up to the moon. But this story is about one whereby we can't foresee where the peak exactly is. Unexpectedly, palm oil prices dropped. It fell from 7,000 ringgit per ton all the way down to 4,000. This in itself was a lesson for me. In terms of commodities, there is this term called fungibility. If people cannot get sunflower oil, they'll get palm oil. And if palm oil gets too expensive, they'll switch to soybean oil. While there can be supply shocks, the demand will adapt over time. And that's something I did not expect. And as you can see, palm oil prices started to stay suppressed for the next few years ahead. It's only recently that they've touched 5,000 ringgit per ton again and started climbing upwards. Share price for First Resources, it was also flat. So I was just holding on to it and collecting dividends, awaiting a much better time to exit. And net, the dividends have produced more returns than the capital gains. My plans for First Resources is that as prices go up, I will eventually close this position, and it's something I've shared before on my Telegram channel. If you're keen to get updates, look for my official links below. On Telegram, there are a lot of imposter groups. This is my official one over there, and there's only constructive discussions for real investors. Thank you very much, and let's move on to my third and final story today, which is actually on my biggest holding, Palantir. Let me start again with my Telegram sharing. Palantir, as what you may have heard already, is one of the fastest growing AI related companies. It's recently been included in S&P 500 because its market cap has ballooned over the last 1-2 years. But when it comes to institutional ownership on Palantir, it's relatively low. And the reason is because market just cannot agree whether it's going up 10x or it's going to crash down to 10% of its current value. My thoughts is that Palantir has very little valuation matrix that can work right now. Yes, the hype could push it to $200 because there's a lot of unknowns in the AI space that could develop very quickly in the next few quarters. Or on the other hand, market could quickly realize that they have overhyped this company and drop it back easily to $50. This is a risk reward owning a company that is the right place at the right time and also the best in class. But I have something further to share. Palantir is not like Moderna, where previously during COVID, it shot up in share price. One day, its services would be no longer needed, and of course, it will come crashing back down. Palantir has a sustainable advantage. And if we study how Amazon, Meta have grown to become S&P 500's biggest companies, you would realize that if execution is done well over the next 5 years, the company can really grow. And that's why as of latest, I have not sold anything away. When Palantir spiked up in January with fantastic results, I did trades while holding my position intact, and when it came crashing down, you would realize that there's no panic. In fact, I actually dabbled a bit more when it was around the $70 range, trimming away excesses when there was a quick rebound. Adding more to it right now, the position is big enough. Can't get too greedy. But setting out of panic, absolutely not necessary. As you can see over here, the gains for Palantir in my portfolio has dropped by 30,000 since its peak, correct? Share price comes down, of course it will come down. Don't need to do fancy stuff like hedging. Just as I said, the market sometimes will overshoot and corrections are part of the journey. I've also noticed at the bottom that I've held Palantir for more than a year. So this has been a journey, and as always I've mentioned before, money is made at the buying, not when chasing stocks like that. I own Palantir, but I say that's possibly not the best time to get started. I'm leaning more towards if it reaches its peak of $120, I would continue to trim down, following carefully how Buffett has held on to his Apple stake as shared in this previous video. That is my stance that I share openly, and hopefully you appreciate that honesty. And if you'd like to find a bit more, let me introduce you to this previous video I have on my biggest investments right now. I'm not buying into Palantir, but I bought into some in my biggest holdings. I'll review that in a future episode. And as always, check this out first to get some context. With that, I'll sign off from here and see you there. Invest safely as always. Goodbye.